Hello and welcome everybody. So we are doing live today with our mortgage lender, Glenn Walker, and he's with Rocket Mortgage. Glenn and I met at Lone Star back in what, 2015? No, 2011, I think.
2011, yeah.
Yeah, far back down, and we both have similar stories when it comes to how we got to this point where we are now, me being a realtor and him being a mortgage lender. We both quit our full-time jobs. And so now we are living life, I think. I really enjoyed the freedom. And what about you? Tell us about yourself.
The freedom is awesome. Is honestly the best part. But one thing I always say is that freedom's not always free, right? You gotta sacrifice for freedom. In our country to get our freedom, unfortunately, people had to go to war and fight and sacrifice their lives for us to have freedom. So same way in our business, we gotta kind of sacrifice some things to have that freedom. But it's worth it. It's worth it.
Awesome. Also, and this is our first time going live, so bear with us. We're in YouTube, Instagram, and Facebook. So, Glenn, if you don't mind checking your Facebook and Instagram, I actually invited you.
Okay.
We have one viewer. Hi, Brandon. I see you, so I'm gonna wave at you.
Gotta interact.
Yes, I think he's also a fellow real estate agent. I'm not sure. Did you see that request?
That would be awesome. Let me see here. I'm gonna come here.
Yes, I invited you through Facebook.
I see it. All right, I see myself. I see you, but
oh yeah, so he is a realtor.
Facebook. Okay.
Yes, we are live on YouTube. I thought we're not. Okay, great.
Trying to navigate all this technology, guys. It's a lot.
Yes, learned it in under an hour.
Yes.
It's possible. So today we are actually, while Glenn is trying to find the invitation, we are going over if you should rent or buy in this market, and then if the interest rates have actually gone up. As of today, we're going to go over an article about that. And then just, some first-time home buyers questions and answers. I know we definitely got some today that we're going to go over, like, what is the minimum loan amount you can have? What is a credit score that you need to have? And all that good stuff. But, I'm not a lender. He is. So we're going to ask him those questions. And feel free, if you're also a realtor, I'm a new realtor. I've been in the business for 15 months. If you have any questions for me, let me know. Awesome. So how do I add you on Instagram? I think you just go to Instagram and then and click on the live in my Instagram, and then I'll add you.
Okay.
Right? Yeah.
What's your I think I have your old Instagram.
Oh jeez. Yeah.
Hold on. What's your Instagram? It's not.
Janine.Cinco.
All right. So yeah, I have your old. Hold on. Let me see.
Mm-hmm.
Because we've known each other for years, so.
We're just seeing each other. I'm like, what? Glenn is already a mortgage lender? Let me connect with him.
There we go. You.
So Brandon, how long have you been a realtor? In what state?
Gotcha. Perfect.
Oh, Greg is online. Hey, Greg. Greg works for Centex. I worked with him recently with one of the new builds we bought here in Spring. So thanks, Greg.
Send requests.
All right,
I just sent the request on Instagram.
Perfect. View request. Go live with. We're doing this.
Yeah. There you go.
Okay.
All right. Let's see if I can make this happen.
Ooh.
All right.
Yes, you can mute that. Sorry about that.
Okay.
Perfect.
There we go.
All right. So Brandon's from Louisiana. Great. I have some clients that may want to move to Louisiana. So I'm going to give them your way.
I'm hearing an echo here.
Right.
All right.
All right.
Can you
Can you hear me?
Yes.
Okay. Perfect.
Awesome. So let's start with the question of the day. I mean, even I'm concerned about this. Is rates really going up today, and by how much?
Gotcha. Well, that's a good question here. So I'm going to see if I can share my screen. I'm going to try. I don't know if it's going to work on Instagram, but it may work on the other app that we're on. Let me know if you. All right, so there it goes. I'm going to bring that down here. Pull that up there. All right, perfect. So now I have a split screen. All right, so you can see my screen though. I see. All right, so basically for the past couple of days, the Feds have actually been meeting, and today's Wednesday, so they're actually going up 0.5%. So, and this came out 42 minutes ago. It's kind of cool. Came out 42 minutes ago. And pretty much they're going up half a percent. And so basically what happened is that during COVID, they stimulated the economy. So think about like dumping all this money into the economy. And it's like, okay, the economy's growing. There's a lot of money out there. And it's like, okay, like there's so much money out there. Like what's going to happen? The economy's big. So now they're trying to shrink it. They're trying to tighten the economy. And the way they do that is by increasing interest rates. Because when interest rates increase, then it kind of slows down the spending. People aren't borrowing money as much. So then it kind of helps it curb the inflation that we're seeing. Because I don't know if you've noticed, but when you go to the grocery store, go to the gas station, anything right now, things are more expensive. And the reason for that is because they stimulate the economy so much, and now they're trying to like organically slow it down by raising interest rates. And that's also the difference between monetary policy, which is the Fed, and fiscal policy, which is Congress.
That's a good
one. And not to take everybody back to school here, but pretty much this hasn't happened. They haven't really increased the percentage like 0.5% since 2000. So this is pretty new for everybody right now.
And let me just add on to that. Even though it has increased today, we are still at historically low interest rates compared to decades ago at 17%. So it is still a pretty low interest rate.
And you shouldn't be scared to buy a house right now. Because like you said, back in the day, it was higher. Interest rates were higher before. So we shouldn't be scared to, purchase.
Mm-hmm. Okay. So thank you for that, Glenn. I guess my second question is, if there are first-time home buyers, if you're a first-time home buyer, what is their first step to buying a house or owning a house in Texas?
I love that question. I love that. I think I actually have something to share with you too. Hold on. I'm a very visual person, so I'm going to try to show as much visual context as I can. And I think for people on Instagram, you probably won't be able to see it as much, but we're also live on Facebook, so that's kind of where everything is going there.
Mm-hmm.
But let me see. Oh man, that was a good question. I should have been ready for that one. Because I have all this stuff I want to share with you.
Brandon just said he's not scared of the higher rates.
Brandon, you're awesome.
Mm-hmm.
You should be scared of the higher rates. Because also you're building equity every month in your house, But the first thing to do when buying a house is get pre-approved. So meeting with a lender like myself, we get you pre-approved. So basically what that does is that you tell me, okay, I make X amount of dollars, my credit score is this, My income is whatever. And then what we need to do is we have to verify it. So once you tell me, okay, this is what I make, then I get your pre-approval. Say, okay, you're pre-approved for, let's say, $500,000. But then I'm going to do what I like to do for all my clients is get them verified pre-approved. Because once they're verified pre-approved, then it's like, okay, you send me your W-2s, your bank statements, and then also your most recent pay stub, and then I can verify that all the numbers that we put in is accurate. Because you can tell me one thing, but then, as a lender, we have to make sure that you can back it up with the numbers. So, and then once you get that verified pre-approval, Janine, that's when I send it back over to you as the mortgage, as the real estate agent. Then you can actually put in a strong offer. You actually just put in an offer on the house right before our call today. Do you want to kind of talk about the offering, like putting in an offer and making sure that it's a clean, strong offer? What does that mean?
What does that mean?
Putting in a clean and strong offer? Can you repeat the question?
Yeah, so after they get verified pre-approved, so that means we verified their credit, their assets, and their income. When they go back to you with that verified pre-approval letter, when you put in an offer on a house, to let them know what that means, what that looks like.
Let them know.
So basically, a lot of my clients, we go and look for the houses even before they present me their pre-approval, and one or two things happen. One is they're looking at houses that's over their pre-approval budget, and so they look at these nice houses and then they're like, oh, we're only pre-approved for this, and then they kind of feel disappointed. So that's why it's always good to have a pre-approval first. And then the second thing is, once you do have that pre-approval and you do know where your budget range is, oh, sorry, my webcam. Let me go to my Mac. I'm sorry.
Hey, Instagram is faithful. Instagram, y'all are strong. We appreciate you guys.
Right, y'all are strong. We appreciate you guys.
So going back to it, I still have my YouTube. No, I still have my Instagram. Once you have an offer and you did find the house that you want, we're gonna go through the process very quickly. Other than hey, lender, I need to get my pre-approval. It takes about how long? A day? Maybe, it depends.
Oh, the pre-approval?
Yeah.
The pre-approval would take, so the pre-approval is like instant. Like, I can get pre-approval within like a minute. But the verified pre-approval, like that one, that kind of goes through like a soft underwriting. And then, that may take, let's say maybe like a few hours or so, probably a day. I'll say a day for a verified pre-approval, just to give them some time. And then that way, once you have that verified pre-approval, you're ready to go. You know what I mean? Like, especially from Rocket, when we verify your pre-approval, that means that Rocket has basically said, hey, whatever house they find in this price range, like we're committed to funding that loan, and that's what happens. We fund that loan.
So I guess I'm going back to the point. You see, like, to be safe, give them about a day. But if you already have that pre-approval ready to go, and you're looking in hot markets like Katy, Cypress, I mean, I feel right now everywhere is hot. You don't want to lose just because you don't have a pre-approval yet in your offer. In an offer, most sellers, well, actually all sellers will need to see that proof of funds or pre-approval letter. So unless you're purchasing in cash, then they still need to see that proof. So that's one thing. And then if they accept your offer, then we go to under contract. We have this grace period called option period, and yada yada yada. That is like another topic. That I can go on and on.
Weeds of everything. Don't scare them away yet. Don't scare them away yet. But when it comes down to putting in an offer, when it comes down to putting in an offer, you definitely don't want to wait. Oh, can you hear me now? Sorry, somebody was calling me.
Yeah, I can hear you.
Somebody was calling me.
Okay, perfect. So yeah, so having that verified pre-approval, it separates you from people that only are conditionally approved. Because conditionally approved means that they're approved based on meeting certain conditions. But when you're verified pre-approved, that means that, hey, we verified those conditions and you are pre-approved, on top of that. So in this hot market where people are putting in multiple offers, you definitely want to come strong. If you have a conditional pre-approval, I consider that not as strong as a verified pre-approval, because you want to make sure you verify those funds, because sellers agents are definitely going to be looking for the strongest offer. So if they have two offers in their hand, they have one that's conditionally approved and one that's verified approved, they're going to go with the verified approved more likely than not the conditional approval, because it's not going to waste as much time, because they've already done an extra step in their due diligence to making sure that they qualify for that house. If that makes sense.
So just a pause right here on YouTube. It says someone's audio is too loud. You have a feedback loop. He has too many windows open with audio on. I don't know if it's me or you.
I don't know.
I am trying our best here.
I don't know.
My camera just went off. Okay, there we go. Yay! Technical difficulties.
It's all good. It's all good.
Yeah,
hey, difficulties come,
Hey, difficulties
So how about
come,
now, Strill Life? Still bad?
I'm here on Instagram's going strong.
Instagram's going
anybody
strong,
on Instagram, can y'all like it? Can I see like any
anybody on
responses?
Instagram, can y'all like it?
I see my boy Chad was on.
Oh,
I see my boy Chad was on.
Yeah, can anybody like this so that way we know?
Can anybody like
Do you
this?
see any hearts?
So that way we know.
no. Is the audio
see any
good?
hearts?
How about on Facebook? Kay, Claire. Okay, yes, we have a heart, so it's good. We're good on
There we go.
Instagram.
Appreciate the love.
There we go.
Okay. Oh, another
Appreciate the
thing that
love.
I wanted to talk about is, whenever you're working with a mortgage lender, and sellers like seeing a mortgage lender. You can still bank with anyone you're most comfortable with, but in my personal humble opinion, it's nice to go with a mortgage lender, not the ones that has personal loans or car loans, ones that just focuses on mortgage. It will definitely make your offer stronger. I guess I'm going back with what you were saying a while ago, what makes a strong offer. And to answer that question, it really all depends on the situation. Let's say you found a house and it's coming soon. It's not even one day on the market, and you run the comps for your client, and you see that the seller competitively priced the home, then you could most likely expect that there will be multiple offers. So what I usually do is I ask the clients first, what's your most comfortable number after seeing and explaining to them the comps that you want to put in. And then the rest are the other terms like financing period. Can you explain a little bit about financing period after I finish this? And then, option period, how much earnest money, and usually it's 1%. You can go a little bit higher, and a lot of different things that your realtor will explain to you, especially if you're a first-time home buyer. There's a lot of terms that you need to get familiar on.
Yep, that's true. And just kind of, there's so many tricks and trades of our practices. I don't want to bombard or throw so many terms out there where it's kind of like, hey, what is this, what is that? Because it's all, not saying that it's confusing enough, but it's already a lot to deal with, going into the process. So I want to make it as simple as possible, so that way it's like, hey,
so that way
it's extremely understandable.
It's extremely
because giving you guys all the backstory and all that, we can do that. But I don't want to scare anybody away or overcomplicate this process, because honestly, it's a very easy process. Maybe right now it's a little bit difficult because the inventory, supply and demand. There's very large demand out there, but the supply for houses are not. There's not enough houses for people that want to buy them.
Not yet.
And especially, not yet. But they're building. If you look in Houston right now, in every area of Houston, if you go to the north side, south side, east and west side, they're building houses. So eventually, just like the market, we're going to have an overflow of houses, right, and not enough people. Just like in the market right now, when they stimulated the economy with all the dollars and money, they're like, okay, we overstimulated the economy. Now the economy is growing like crazy, and we have to, raise interest rates to kind of slow it down.
Mm-hmm.
That's basically what may happen as well in with the houses. But they may drop the prices. Well, hopefully, we don't know. Prices may not drop like we want them to.
It hasn't slowed down in my field right now.
Yeah. So probably not right now.
Yeah.
Probably not right now.
What about in Louisiana? Is
right
it
now.
you're still seeing the same thing? Brandon, sorry. Are you all still seeing the same thing in Louisiana hot market? You may be busy, but
awesome. That's all good. Denise,
awesome. That's all good.
well, I know we had some other questions on there. What other questions did you have? Did people have?
Oh, okay. So the questions we got today is we can answer these two questions and then we'll move on to rent versus buy. Okay. So what is the minimum loan amount that people can get, and what is the minimum credit score they should have or work for? Yeah.
Gotcha. No, that's totally good. So the minimum loan amount that most lenders like to see is at least 100,000. You know what I mean? Like we could probably go lower, like let's say 75. But if we can at least do 100,000, that will be that's going to make it more comfortable, because you got to think about the interest rates and all that, and then because all that plays into an effect on the house. And the minimum credit score is a 580.
580.
580. Yes, we can go FHA all day with a 580. Qualify for FHA. So
awesome.
So 580 is not that bad. We can go low. So 580 is the lowest we can qualify people for.
So my question is, and I know, what if, do you guys help, like mortgage lenders help with increasing their credit score?
Yes. I know working with Rocket Mortgage, we have it's not a company, but it's basically like a partnership with a company called Fresh Start. So Fresh Start basically tells our clients exactly what they need to do to increase their credit score to the to the number that we needed. So as long as they're not like in the 4s or 300s or whatever.
I'm not seeing that.
We can 300s or whatever.
Right. Man, you'll be surprised.
Right.
But we can definitely tell our clients exactly what they need to qualify for a mortgage with our Fresh Start program.
That's awesome. Yeah, your best friends for buying your first house is a realtor and a mortgage lender. And guess how much you pay the realtors?
Yes.
0.
There we
I
go.
mean, technically, you have to provide the sellers, the financing, so everybody pays for the realtor. But our services is free of charge to you. Is that the same for you, Glenn?
Absolutely, yeah. I don't, tell anybody, hey, pay me this, to do your loan. Not at all. There are origination fees. Like all lenders have origination fees, but ours are pretty comparable and pretty competitive compared to the market. So that's about it. But I think, but besides that point, working with a
besides that
partnership,
point,
having a partner
working with a
that, works
having
well
a
together. So
partner
me and Janine,
that,
we
you know,
work
works
well
well
together,
together. So me and Janine,
So
we
when
work
the
well together,
clients
you know.
need somebody,
So
like,
when the
hey, you
clients
want to have a
need
partnership. So
somebody,
you don't want
like,
to have
hey,
your
you want to have a
lender
partnership. So you
over
don't
here
want
in
to
the
have
corner,
your
in one corner, and your
lender
realtor in
over here
another
in the
corner.
corner, in one
And then
corner,
it's
and
like,
your
okay, they
realtor in
have to
another corner.
communicate. They need
And
to
then it's
talk
like,
and
okay, they
be
have
like,
to
okay, how can I
communicate. They
help my
need to
client
talk
the
and
best
be like,
way?
okay, how
So
can I help my
so
client
for
the
your
best way?
lender
So
and your
for your
realtor to have a really
lender
good
and
relationship,
your realtor
like,
to
that's
have a really
important,
good relationship,
because you want to make
like,
sure
that's
that everybody's
important
on the same
because
page.
you want to make sure that
So,
everybody's on the
if
same
anybody
page.
decides to work with
So,
us,
you know,
then they're
if
going to get
anybody
both of
decides
us.
to
They're
work
going to
with
get
us,
the lender
then they're
and
going to
they're going
get
to get the
both of
real
us. They're
estate
going to
agent,
get the
and
lender
we're going
and
to do
they're
the
going to get
best
the
thing
real
for
estate
them.
agent, and we're going to do the best thing for them.
The thing that makes me a great lender is the
The
three
thing that
C's.
makes me a great lender
I'm
is
very
the three
caring for my
C's.
clients.
I'm
I
very caring
collaborate,
for
and
my
I'm a
clients.
connector.
I
So basically,
collaborate and I'm a
I care
connector.
for my
So
clients.
basically,
Each and every
that, you know,
person
I
that,
care for my clients.
entrusts me to
Each and
do
every
their
person
mortgage,
that,
I'm
you
going to
know,
do the right thing
entrusts
for
me to
them.
do their
So
mortgage,
I'm going to
I'm going
put
to do
your
the right
needs
thing for
above
them.
my
So
needs
I'm going
as
to
a
put your
fiduciary.
needs above my needs
Then
as a
collaborative.
fiduciary.
I love
Then
working with
collaborative.
other people,
You know,
like
I
me and
love
Janine,
working with other people, like me
collaborating
and Janine, like,
on
you know,
many different things. We're
collaborating
collaborative.
on
And then
many
I'm a
different things. We're
connector. So I'm
collaborative.
also going to
And then
connect
I'm a
you with the right
connector.
people
So
that
I'm
you
also
need
going to
as
connect
far
you
as your
with the right
insurance
people that
goes.
you need
When you
as far
buy a
as your
house, you want to
insurance
make sure
goes.
you
You
have a
know, when
security
you buy a
system.
house, you want to
I
make
have a
sure you have a
security person.
security
So,
system.
I'm
I have
going
a
to
security
connect you with the
person.
right
So,
people
you know,
that
I'm
you
going
need
to
to know
connect you with the
every
right
step of the
people that
way.
you need to know every
So just
step of the
remember
way.
those three C's,
So just remember
that
those
makes
three
up your mortgage
C's.
lender here.
You know, that makes up your mortgage
And
lender.
I've known Glenn, like we said in the beginning, for such a long time. I think he's one of the detailed people I know, because I know how when I choose to work with lenders, I want them to be responsive. I want them to be as detailed as I am, and I want them to be knowledgeable. And Glenn checks all those boxes. So otherwise, he wouldn't be here with me today.
Appreciate it.
Going live.
No, honestly,
Yeah.
and that's another thing about
No,
connector.
honestly, and that's
When I
another thing
connect
about
somebody
connector.
to
You know,
like a
when I
referral source,
connect
like a
somebody
partner,
to
I want to
like a
make
referral
sure
source,
that
like a
I'm going
partner,
to send my
I want
mom
to
to
make
that person.
sure
Like,
that I'm going
that's
to
my
send my
measuring
mom
stick.
to that
Will
person.
I send my own
That's
mom
my
to that
measuring
person?
stick.
And
Will I
Janine, you're
send my own
somebody
mom
that
to
if my
that
mom was
person?
looking for a
And
house,
Janine,
I'll be
you're
like, hey,
somebody
I
that if
need
my
you to
mom was
talk to
looking for a
Janine,
house, I'll be
please.
like, hey, I need you to
And
talk
that's
to
my
Janine,
measuring
please.
stick is,
And that's my
are they
measuring
good enough
stick is,
to meet my mom,
are they good
Yeah.
enough
work with her?
to meet
I
my mom?
appreciate that. And
Absolutely.
Work with her.
And we're not just
So,
saying this because,
absolutely.
we're fond of each other or whatnot, but it's also a good rule of thumb to at least interview 3 mortgage lenders and 3 realtors that you're going to work with, because your personalities need to match. They need to listen to whatever your needs instead of telling you what you need. And they got to be knowledgeable, fast, and especially in this market. So, and I'm pretty sure all the realtors, all the mortgage lenders, we went through a rigorous, what is it called? Studying. For us, it's 180 hours here in Texas just to become a realtor, and then more studying, and then the same thing with mortgage lenders. So,
Yeah, absolutely.
we're very
Absolutely.
knowledgeable.
Yep.
So
Absolutely.
the next segment is,
Yep.
is it best for you to rent right now or to buy a house? So we're going to use nerdwallet.com. I cannot share my screen in Facebook or Instagram, but we can do it in YouTube. We're also live in YouTube. So, and we're going to play different scenarios at different price points and different down payments.
Yep, there we go. Okay, so let me see
There we
here.
go. There we go. Okay, so
I can actually share
let
my
me
screen
see
on
here.
YouTube too.
Actually, share my screen on YouTube too.
Bam, right.
Yeah, we were
here.
practicing how to
Bam,
share
right
screens, so hopefully it
here.
works today.
Oh yeah, no, we got this. All right, so
Awesome.
there it goes right there.
He's so positive, you guys.
There it goes right
I
there.
love him.
Gotta be. Hey, well, one thing I know
Gotta
is
be,
that
gotta be.
you gotta,
Hey,
you gotta
well,
keep
one
going.
thing
You
I
gotta
know
go
is
with the
that, you
motions.
gotta
Yeah.
All right,
keep
so
going.
if
You
we
gotta
were
go
in
with the
Houston,
motions.
Texas,
So,
right? Let's
all
say
right. So
Houston,
if we were in
Texas,
Houston,
the
Texas,
average
right?
house,
Let's say
like if you were
Houston,
looking at
Texas,
all houses
the
in Houston,
average
the
house,
average
like you
house
look at all
right now
houses
is
in
about, let's say,
Houston, the average house right now is about, let's say,
$250,000. It is going up, so
$250,000.
actually it's
You know, it
257
is going
to
up.
be
So actually,
exact. And some
257
change, so
to be
257.
exact. You know, and some
So,
change. So
all right, so if
257.
we were to do,
So, all right.
let's
So if we
say
were to do,
20%
let's say
on a
20% on a
257,
250.
or it must be, okay. It
And
says
I will
value
copy
must
paste
be
the
less
link.
than
It
100.
says
Okay,
value must be less
cool.
than.
All right,
Okay.
so down payment 21%. So 21% on a
So down payment
257 is
21%. So 21% on a
$21,000. No,
257 is
is
$21,000.
$53,000. So
No, it's
big number there, but we
$53,000.
can also
big number
shrink
there,
that
but
down
we can
too.
also
And let's just say that
shrink that down
Is
too.
that
And let's just say
20%?
that
Sorry, I did not hear you.
yeah, 20. Yeah. So I'm gonna.
yeah,
Can you hear me?
yeah.
Yes.
So I'm gonna.
Yeah.
Can you
So
hear me?
257, and then
Yeah. So
multiply by
257,
20% is
and then
actually
multiplied by 20%
is 21% is 53,000, but 20% is
51,400, but
51,400.
20%
So
is 51,400. So
51,400 is 21%.
51,400
All
is
right, and
21%.
we can always adjust that. We're going to adjust
All
that.
right,
We're going to do a
and
couple
we can
scenarios.
always adjust that.
And
We're
let's
going to
say
adjust
the
that. We're going to do
mortgage
a
rate
couple
is
scenarios. And let's
4.25,
say the
right?
mortgage rate is
That's very
4.25.
generous.
You know, yeah, it really, honestly, in today's market, it is. So,
yeah, it really, honestly,
you know,
in today's
and
market,
then
it is. So,
comfortable monthly
you know,
rent.
and
Let's
then
just say,
comfortable monthly rent.
1,300.
Let's
You
just
know,
say,
I've seen some rents around 1,300 right
I've
now.
seen some rents around
And
1,300 right now.
what would you say the property tax
And
is? Let's kind of
what would
throw
you
out some
say the
numbers.
property tax is? Let's kind of
That
Like,
is hard
I
to
think,
tell.
like.
okay,
Say, well, we can
HOA
keep
fee, let's just say
everything generic right here.
500
HOA
a
fee, let's just say
year.
500 a
Renovations.
year.
Oh man, they're very detailed on
Renovations.
this thing.
Oh man, they're very
Rent
detailed on
security
this thing.
deposit 1 month.
Rent
All
security
right,
deposit
so
1 month.
all right, Jenny.
So
How does this
all right,
bad
Jenny.
boy
You even have
work?
more options. Wow, you're
How
going
does
all
this bad boy
through
work?
all of it.
I know. I didn't mean to go all through the
I
whole
know,
thing.
I know. I didn't mean to go all through
Oh,
the whole
okay.
thing.
So,
And then it cuts
So
off here.
and then
how
it
do I do
cuts
So
off
this?
here.
comfortable. Let me see. Oh, I think
So
it's right here.
comfortable.
I think it tells me.
Oh, I think
Break
it's right
even.
here.
So
I think it
break
tells me.
even is like
Break
4
even.
years.
So
So right
break
here.
even is
So
like
if you
4
stay in your home
years. So right here.
for
So
3
if you
years,
stay in your home for 3 years, renting is cheaper than buying. So yeah. So if you don't stay within 3 years, renting is cheaper than buying. You'll save $240 per month. So if so, I guess to kind of shorten it here is that if you're looking to stay in your house more than 5 years, then you should want to buy. But if you don't think you're going to be in your house more than 5 years,
till you
then
find that
maybe you
ideal
might want to rent
location that
until
you
you
want to be
find
in.
that ideal
So let me
location that you
also
want to be in. So let
I'm
me
gonna
also let's
do
run
275 times
do
0.035. So 899 right there.
so
899.
8.99.
Perfect. There it is. All right. So let's just say we put 4% down.
All right, so let's just say we put 4%
Glenn,
down.
Yes.
sorry to cut you off, but there is still an
Yes.
echo coming from your side. I really don't know how to use echo cancellation. Hopefully that helps.
Maybe
Okay,
so.
continue.
Okay. Cool. So yeah. So
Okay.
if we did
Okay,
4% down
So yeah,
on a
so if we did
$257,000 house, our if we were to buy it, it'll be about
if we were to buy it, it'll be
1264.
about
But if we were like let's say we were
1264.
renting,
But if
you know,
we were
that's
like, let's say we were renting,
way more than that.
that's
You can't find anything
way more than
decent,
that. Can't find
around there.
anything
So
decent,
honestly, buying is
around
probably
there.
better
So
than renting,
honestly, buying
because
is
then
probably better
with
than
that,
renting.
and that's
Because then
probably not
with
including
that,
taxes or insurance as
and that's
well. But
probably not
but we can
including
also
taxes
look at
or
that later.
insurance as well.
But with that though, with buying, you're building
with
equity
that though,
every
with
month in your
buying,
house.
you're
You
building
said I don't
equity
hear
every
echo
month
on here.
in your house.
I don't hear
I
an
don't
echo.
hear
Okay,
echo on here.
Brandon doesn't hear echo. Thank you, Brandon.
Okay.
He's awesome.
Brandon doesn't hear
All
echo.
right, so
Thank you,
yeah,
Brandon.
so buying
He's
is
awesome.
probably a little bit
All right, so
better
yeah,
than
so
renting.
buying is
If you're
probably
going
a
to
little
stay in
bit
your
better
house,
than renting.
more than
If you're going to stay
5
in your
years or
house,
at least
more
5
than
years or
5
more,
years,
you might
at
want to
least
look into
5
buying
years or
Mm.
more,
over
you might
renting.
want to look into buying
Oh,
over
echo
renting.
see
remains.
here.
Oh man.
Let me see here.
This is I'm talking about YouTube Live. So I'm sorry guys, we're having technical difficulties in the YouTube Live, but we are also in Instagram, Janine.Cinco,
Right.
if you want to listen there. But I cannot figure this out. I'm so sorry.
It's okay.
It's okay.
And then
License calculator.
hang on,
And then
purchase price.
Maybe can you remove one of the windows that's probably getting.
Yeah, let me try that real quick here.
yeah, let me
Oh, hello. You're gone.
Okay, I'm gonna reconnect. I got you. So default. Okay, array.
Erica just joined, and beauty_remains in Instagram.
Hey everybody.
Mm-hmm.
Everybody. All right, so see if I'm in there on YouTube.
Okay. And thank you guys for the feedback in YouTube and also in Instagram.
Yep.
Now I have an Echo too. Oh my gosh.
Awesome. And then check. I have another calculator that I want to show you guys here on
Oh, you're calling.
YouTube.
Okay.
Yeah.
I see what they're hearing. You hear that?
I do.
Okay. I don't know what you did. That worked, whatever you did.
Okay. Well, yeah.
All right.
So,
That works. So,
uh-oh.
no.
I can hear it again.
Mm-hmm.
Sounds
Sounds
like
like
one
one
of
of
those
the
house
house
alarms,
alarms. You know,
when the smoke detector goes off. Every time I cook, that's what happens now. I'm joking. Yeah, but no, seriously, it's still a great time to buy. If you're in the market to buy, still a great time to buy. So, don't ever feel like you don't have to buy or whatnot, but it's still a really good time to buy. But if you want to rent for a little, if people want to rent, let's say for like a year or so, and save up a down payment, or just kind of see what the market does, then I think that's a good idea. It just depend on your situation. But if you have kids and you want them in a really decent school district, maybe you want to rent there first before you buy to kind of figure out like, okay, how's the area, how's the neighborhoods, and then you can say, okay, maybe I'll end up purchasing here. But I would always side on the caution of wanting to purchase versus rent, because when you see the amount of money that you kind of throw away over a 3-year period, 5-year period, up to 10 years, that's a lot of money that you're not building. And also, home ownership is one of the best ways to build wealth. A lot of people build really great wealth just from their home. So yeah, so definitely keep that in mind as well. Um,
So
Go ahead.
can I add a little bit on that? So I agree. So my point is yes and no. Depending on everyone's financial situation, let's say, um, what's the return right now on, you know, putting your money in real estate versus, let's say, an index fund. Index fund is, for me, I get maybe 8% return or something like that. I mean, I'm not a financial advisor or anything like that,
Well, I
but
am a financial professional. I do have my investment license, so I can help you there.
oh, you know,
I
great.
do.
So
I
let's
do.
talk a little bit about that because maybe renting is best for other people because they can leverage that money somewhere else where they can get a higher return.
Right. But over time though, like your house is your biggest asset, and you're building equity every month into that. Even if you do invest in the market, you can still do that. You can still, have your brokerage accounts or investment accounts and, still purchase a house. And then with those assets, like your house appraises, sorry, someone's calling me. So your house appraises and then your investments appraise. Like, most people become cash millionaires because a combination of their investments and their real estate. So I
Yes.
really think that, you need to look at your house as some type of investment, because your house is an investment for the long term. And then, maybe buy, you can always, buy up into bigger houses. You don't have to go straight to that $600,000 house right now. You can start off with the house, right now in Texas about $250,000. Start off small, build equity in there, and then take that equity and put that into the next house. Or what you can do is rent out the old house, have positive cash flow, and then you can apply for a bigger house later on down the road. So because some people, Janine, wants to go straight to that big house, the 5 bedrooms, all that. You can work your way up to that. You don't have to go straight there. There's a better way to get there. you know
That's true. And just sharing a little bit about my story, I was for 300. Did I use the whole 300? No, because we saw a deal in Laporte. So this is near Deer Park, Pasadena, for 158,000. And this is the buyer's market 2 years ago, and I think in 6 months we got like 50,000 in equity alone.
Yeah.
So I mean, not our dream house, but now it's rented out, and all that stuff. So I guess what Glenn is talking about is called the BRRRR method. So buy,
Well, it's
rehab,
buy
rent,
rehab.
repeat.
Yeah, but yeah. Well, typically the Burr method is when you buy a a house that needs fixing up. I don't know that might have been a fix up house, so that's probably true. Oh, perfect. There you go. That's the Burr method. Yeah, because I'm actually doing the same thing as well. Me and my wife, we bought a house for about 170 4 years ago, and the that thing shot up. The value of the house just shot up like crazy, and now they're going for like well over 200s. So I thought that was cool. Because right now it's a seller's market. So if we decide to sell or put it up for rent, now we have an investment. But it looks like Brandon
Yeah.
asked the question. He said, "I bought my house for 180, put 40K in it, and now it's worth 350." Brandon, you're the man. Like, dude,
That's great. Like
Brandon, yeah,
ROI is so good.
yeah. Like, man, Brandon, that is awesome. That
That's doing
say
yeah.
what, Brandon? Are you kidding me, man? Like, dude, hold on. He said 350. Man, that's like 130 in equity. Like, you know what I mean? Like already like that, that he's appreciated. But that's how real estate appreciates. But then also if you're investing, that's how your money appreciates too. So let's just say, and I'm just going to put on my financial professional hat for a second. So let's just say you had, let's just say 700,000, in investments or whatever. This is like, 401k or whatever, and the market jumps up, let's just say conservative 20%. That's $140,000 in 1 year that your investments just earned in the market. You know what I mean? So you would need 20% in the market to get what Brandon just got in real estate. You know what I mean? So real estate and investing, you got to do both. I highly recommend that you do both and not just one or the other.
Yeah,
Keener,
put all your
Louisiana.
what?
Yeah. Oh, now he said he's in Keener, Louisiana, 5 minutes outside of New Orleans. My mom was just in New
Awesome.
Orleans last week, man. New Orleans is nice, man. I've been there a couple times. I love it. It is
For
truly,
gambling
truly
and
beautiful.
casino.
I never gambled. I never gambled, but I definitely been there though.
Man, okay, so I mean, we are over our time. We
Okay.
said we're gonna do this for 15 minutes. Before we close this out, are you ready to close this out?
I'm ready. I'm ready. I'm ready. It's sad to
Okay.
say bye, but I think we had a good time, and we're going to just get better for the next one. Like I know we have some technical difficulties, but the next time we're going to hit it stronger.
Awesome. Brandon said I couldn't get that kind of return any other type of investing. Same here. That's why I invested in real estate, and I is what I can tell you. Most of the millionaires I know, they have, their portfolio is including real estate.
You got to have real estate. Brandon,
So
thank you so
before
much,
we
man.
close
We
this
appreciate
out,
you.
yes, thank you for joining us today. Before we close this out, do you have any questions at all for me or for Glenn? Anything real estate related?
And while they're typing that, you can also contact me. Texas Financial Guide on Instagram, and Glenn Walker on Facebook. I'm here.
Perfect, perfect. Okay, I don't think we have any questions on YouTube,
My man, Brandon.
Facebook, and Instagram. All right, that's it. This was a great first live with some technical difficulties, but hopefully we helped out today. Okay,
There we go.
that's it. Have a good day, and thank you, Glenn.
Bye, everybody.
Bye.
Oh, let me see. Let me see. Oh, I forgot to get off here. Here I go.